at your 105.7 Light FM. Well, unemployment's up, jobs aren't being added at the rate we expected it to, and wages aren't growing as fast as anybody expected. That sounds terrible, which means investors just seem to absolutely love it this morning. Let's find out what's going on Wall Street this morning with Phillip Statler from Statler Financial Services in downtown Sebring. And Phillip, this is the ultimate bad news is good news morning, isn't it?
Yeah, I mean, listening to you this morning, thought it was terrible. Yeah, markets would be down significantly, but God tell you, Dave, I was watching the futures, and when the jobs number came out, we were already, the Dow was already up in the low 200s, and it jumped to almost 550, just boom. And so we continue to see that today, this morning across all the indexes are getting a nice bump this morning. The traders are liking the slowdown in jobs and other economic news.
Absolutely. To quantify it for folks, yeah, everything looks crappy except for Wall Street at the moment. And really, it's not that way because we've been looking for a slowdown. And after the last few weeks' reports, like the first quarter labor cost report that threw us in a tailspin earlier this week, this was all kind of a respite for Wall Street investors. They expected to see 241,000 new jobs added to the American economy during the month of April. We only added 175. I find that fascinating, Phillip, because that's about the number that ADP estimated happened on the private sector. So maybe, just maybe, the government added none. That is too much to ask, isn't it?
Yeah.
Unemployment rate. Yeah, it's also dreamland. Unemployment rate ticked up. We were at 3.8%. The unemployment rate ticked up to 3.9% off of April. And we were so nervous, or at least Wall Street was, about the labor cost report that came out on Monday morning and that sent us into a tailspin. March's wage increases were expected to go to 4%. And wage increases during the month of March, April rather, annualized out to only 3.9%. So basically, everything looks like it's leveling out. The employment market is flattening out. We need to say that the first-time jobless claims are pretty close to an all-time low yesterday, so it's not like we're throwing people out of work, but still, we're slowing down, and that's what the Federal Reserve has been crossing their fingers for.
Well, that's right, Dave. But we do have to remember one thing. This is only one data point. So we have to see if we can continue in that direction, and then the Fed might be a little happier.
That's true. That'll make the Fed happy. I was going to accuse you of not having enough coffee this morning or something. Yet yesterday was a pretty good day, just on expectations of seeing things level out. The Dow was up 320 points. The S&P was up by 46. The NASDAQ exchange was up by 235. The NASDAQ was up a full 1.5%. So somebody had an inkling that we were going to have a disappointing jobs report, which means a leveling off employment picture for the week. So everything is looking like it's coming up roses so far. And then at the end of the day, Apple reports, and China doesn't stink as much as we thought it did, so everybody's happy, right?
Well, you know, it's always good when Apple reports because they always got lots of things to talk about, right? So big news for Apple is their big stock buyback, right? They authorized the largest buyback in history, $110 billion for Apple, huge number. But let's dig down a little deeper, Dave, because overall, they had a revenue slowdown of 4% year over year. Revenue was down basically 4% year over year. The iPhone sales down 10%. You know, that's their marquee item there, and
they pretty much missed on every single gross revenue item except for their retail sales through the App Store. The good news might have been just that the Chinese slowdown wasn't as bad as investors expected it to be, and they managed to make more money. But the gross sales numbers were nothing to write home about, were they?
No, they really weren't. Now, they did make 3 cents a share on earnings, more than expected at $1.53. But that was really the only good news they had, other than this, the stock buyback. Obviously, that's helping them significantly this morning as they continue to trade up almost 7.3% this morning.
That's amazing. They were up something like 4% immediately after they reported after they came out with the report. Lest anybody wonder why we spend so much time on apples. Yeah, just because we got iPhones that helps. But more than anything else, I think I remember a stat some time ago that Apple is the most widely held stock in just about every mutual fund and ETF that's out there that tries to track the indexes. So you own Apple if you've got basically anything that isn't in an old sock. So this stuff really does matter.
Oh yeah, it absolutely does. Because you're right, the growth mutual funds they love Apple. So we look at that, and then let's go to let's look at crypto. Not necessarily crypto itself, but Coinbase. Coinbase built their whole platform around trading Bitcoin, holding Bitcoin, that type of thing, and other digital currencies. But with the surge in Bitcoin value, really helped Coinbase this last quarter. They beat by about $300 million in revenue, up 30% year over year. Now, the other thing, we have earnings, but we're not sure that they're really comparable to what the analysts were looking at. So they earned $440 a share. Now, we're not sure if that's haven't been able to dig through and find out if that's an adjusted value because the expectation was $1.09. And so my report specifically says these may not be comparable, but still, it was good. They had a profit, and so that was good for Coinbase. They are trading well. They flipped the other way, Dave. They're down 1.9% this morning.
Somebody read the thing about these figures don't mean anything, in other words. I got a quarterly report. These figures are meaningless, but read them anyway and buy my stock.
Something like that, right?
Yeah, okay.
All right, so then let's move on to Expedia, looking in the travel sector. Expedia having a rough quarter. They beat on revenue by just a little bit, but they lowered their full-year guidance, which is probably what's hurting them the most today. They're the ones, they changed the name, right? VRBO to Verbo. I'm not so sure that's really helping them. They've had a slowdown in that sector of their business. So that's not helping them any. They're trading down almost 11% this morning.
No, well, poop. Now we're starting to get the pattern I'm used to hearing from you.
Yeah. But hey, but on the other side of the coin, we got Block reported, and they had earned 85 cents a share versus 72 cents expected. They did beat on revenue as well. Remember, they're the credit card platform for small businesses. Really use them a lot. They used to be known as Square, but they're trading up 9 1/3% this morning.
And I know that's a growth industry in the credit card market. I mean, our service clubs use them at their fundraisers all the time. Plug it into a cell phone, swipe the card, and it goes into your account. It's convenient.
Yeah, it is. It's very convenient. And so that's been a good thing there for them. And I do have one more that just hit my sheet here. Hershey reported. And they did really well. They beat by about 40 cents a share on earnings per share. They beat on revenue as well, and so chocolate was good this quarter. Maybe it's because of Easter, but they're trading up about 0.8%.
Cool. Happy to see that. The stat I saw that was sharing before we went on the air, I forgot to mention, we're now past the halfway point in the earnings season. Over half of the Standard & Poor's 500 is reported. And for all the misses, because we tend to catch the things that are newsworthy, by and large, it hasn't been a bad earnings season so far. Numbers are a bit better than expected. The average Standard & Poor's company has reported an earnings growth of 5.5%. And we were only expecting about 3.5%. So for the high and low points that we report in the morning, it really hasn't been all that bad so far by at least this count.
Well, yeah, it sounds like it. It's which is some good news. But we've had some big misses, but bigger than I usually remember seeing anyway.
I was going to say the misses are bigger and some of the makes are bigger as well. It's been kind of a surprise. Update yesterday on Wall Street. I'm looking at my futures charts because I get delayed quotes, but I saw a big knee upward about 10-15 minutes ago, 45 minutes before the open. How are we doing today?
Hey, we are up. We're off that all-time, or not all-time, but that big jump this morning where it hit about 550 on the $550 up on the Dow. It's below 500 now. It's up $495. That's 1.3%. The S&P 500 is up 1.15, and the Nasdaq 100 is up 1.6%. The big winner today is going to be the Russell 2000 right now, up 2.2%. Good news for them. Yeah. Hey, on the other side, we got silver sliding about 0.4%, $26.72 an ounce. Gold's down a little over 0.1% to $2,306 an ounce. Crude oil, Dave's going down, buddy. I mean, it is up from the close yesterday, but I love it. It's below 80. It's down about 0.1% right now to $79.06 a barrel.
Yeah, it was under 80 yesterday, and I was kind of getting ready to break out the champagne. I'm glad it's staying there. Morning to morning changes. Overseas markets, the Asian rim markets tend to follow our closing, and they were kind of mixed. They're not quite confident on a good day yesterday, so they were mixed. The average Asian index is about flat this morning. High points, though, are like Hong Kong up by a full 1.5%. Mainland Chinese markets down by almost a full 1%. By the time you get to Europe, they're responding to our futures, and they're on balance pretty happy. I don't have the reaction to our unemployment numbers, but before they come out, the European index overall was between 0.5% and 0.9% up halfway through their trading day, so it's looking good in Europe as well. Getting a retirement snapshot that'll actually work for a plan that you can count on, that takes a professional pair of eyes. How do I find you to get those eyes on my plans?
Then give us a call at 863-382-0037 to schedule their core retirement design, where we'll help them design the retirement they always dreamed of. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. at noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730, 95.3 FM.
And back here again tomorrow on Monday morning to figure out what the week is going to look like ahead of us. We'll be seeing you then, all right?
All right, man. You have a great day.
Thank you, sir. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. Hope your week's been well. Hope you have a great weekend. I look forward to speaking to you again soon. Take care. So long.